This is Agriculture Today. We are joined now by K-State grain economist Dan O'Brien for this week's grain market update. And Dan, before we get into things, thanks so much for joining us today.
I appreciate the opportunity, Samantha. Thank you.
Absolutely. So last week we kind of ended teeing up for what we wanted to talk about first and foremost this week, and that's the USDA's prospective planning and stocks reports that were released. They were released last Friday, or I think it was around 11 a.m. on the 31st. So what all did we kind of see from those reports?
Well, there was some important information that came out, and the markets, of course, looked at them, and we've had some volatility in the last few days since that. Some of it related to the findings of it, but overall, I guess stand back and look at the broader picture of it. There were more corn acres than thought, less soybean acres. For wheat, not a lot of surprises other than lower hard red spring wheat acres coming in. Stocks were tight all the way around. Corn ending stocks as of March 1st, down 4.6%, and the number of years low that the corn stocks, soybean stocks, and others were are you'd have to go back and get a calculator and check out how many years it's been since we've been that tight. So generally, the stocks numbers came in, supported tightness in the markets, and no doubt, we're going to come in now to the April World Agricultural Supply Demand Estimates reports, and those tight stocks numbers will come in and be reflected in the current year's ending stocks, and frankly, we're about 1 month away from the May reports, where the USDA starts to put out official numbers for the next marketing year. So we're looking at a tightening of old crop ending stocks, likely a tamping down, a tightening up of new crop ending stocks, and stocks to use numbers that are not indicating, at least yet, of any rebuilding that would be occurring. And you and I have talked about this at different times, even before we came on the air today, about the current state of the markets, and you wonder, with all the risks that are out there, why we are priced at certain levels, and there's just a number of issues that have to be dealt with. But these stocks and acreage reports are just, I guess, a laying down a foundation now, especially on the planted acre side, that we'll build upon now as we go forth and start to deal with actual in the field crop production uncertainty in coming months.
Sure. And, one of the crops that I think of right now specifically that it's probably a key time for is wheat, I would say. And, you mentioned that wheat is there's a lot of wheat out there planted, but that doesn't mean that it'll probably be harvested. And that's very specific for us here in Kansas with the ongoing drought.
Yeah, for Kansas, we're shown to have 11% more planted acres of hard red winter wheat. And as you look from the Canadian border down to the Texas border, you see all those states have strong increases in planted acres, with questions about how we'll actually be able to harvest a lot of those acres. For winter wheat, actually, in North Dakota, and there is some winter wheat in North Dakota, most of it's spring, up 23%. South Dakota up 12, Nebraska up 17. Again, Kansas up 11, Oklahoma up 7, Texas up 26%, and just strong questions about how many of those acres are actually going to be harvested, especially when you look at the latest set of drought monitor numbers, and see the dryness coming through much of Nebraska, through, of course, a lot of I guess anything other than the parts of northeast Kansas and maybe some east central. Everything else has drought to varying degrees in it. Oklahoma, a lot of the wheat belt, Panhandle, all pretty tough. Texas Panhandle, heading on down through a lot of their ag production areas, all just all not yet having seen the moisture that we're thinking is coming as we switch eventually here from La Nina to El Nino. So all of that still on the plate. I want to say something about that transition. I think that if ag producers are probably wondering about, current corn prices. Again, D's corn at 560 still very high, but about 40, 50 cents below the highs of where we've been. November soybeans closing on Wednesday at 1316, and current soybeans at 1511. That would be the May contract. Again, so you see those type of differentials. Pardon me, for corn, it's just said also May corn at 652, D's corn 560. So basically about 90 cents lower. May soybeans 1511, November 1316 at just about $2, $1.95 lower. So clearly the markets are anticipating anything other than dry, tough conditions this summer, and are showing that, are pricing that into the lower new crop bids. Those are still historically very good bids, but we right now I think the market narrative is that, hey, we see this weather change coming. We think things are going to be better, and until we start to see some type of evidence in the field that would shake that, we'll probably still have a pessimistic view of new crop options, new crop grain futures options as we head out in the coming months and weeks.
Sure. You just jumped into futures there, and I think a lot of the futures that we're currently looking at, a bit of interesting, dynamics going on. And I would say even our cash dynamics are even more interesting in terms of what we're seeing here locally in Kansas.
Well, yes, we are seeing grain sorghum reemerge as an export product, and in fact, in some of the main export-oriented markets, Topeka in particular, Topeka and Salina, you have as of on Wednesday, April the 5th, you saw the new crop the cash bids for corn at 688, for grain sorghum at 692. Those were the top ones for elevators in those areas. New crop bids virtually equal at 531 for both. So for grain sorghum, which had been trailing behind corn for a while, that's really a change. For Salina, you've got sorghum cash prices, spot prices about at 688, corn 697, new crop bids 546 for corn, 541 for sorghum. So again, pretty strong situation. And when I think of Salina and Topeka, those are good ag production areas, but they're strong export terminal locations. So you're seeing that, and then you're seeing some strength for sorghum. And in the last several weeks, you've seen grain sorghum exports come on pretty strong. Even some elevators I drive by out here in western Kansas, suddenly there are piles of grain sorghum emerging. I'm sitting on the ground beside them, and I think, well, where'd that come from? We haven't had grain sorghum for a while. Well, somebody's pulling grain sorghum out of storage, bringing it to these elevators, which can load unit trains or load train cars, and getting ready to send it down the road. So we see some evidence of this even out in the country of grain sorghum starting to move. And frankly, for our sorghum people, it's the timing is pretty good in that, we're coming up on planting. Do people plant corn? Do they plant sorghum? Well, when you have pretty strong competitive bids between those two in some dry areas, that basically aims us at both drought tolerant corn and at grain sorghum, and then farmers choose which they're more comfortable with growing. So we'll see where all that goes in coming weeks.
Sure, yeah, demand there driving, some response, some movement from our sorghum producers here in the state. That obviously a great situation for them to be in, like you mentioned right now, with current planning when it comes to planting coming up soon, quicker than I think a lot of us anticipated. But we also have some interesting dynamics between feed grains and soybeans going on right now. I believe you mentioned that was in the futures market.
Yes, we're in an acreage battle, as we'd mentioned, and I know what the national numbers generally are when you look at new crop soybean futures versus new crop corn futures, and we have a break even of about 2.3 that we consider to be kind of a neutral zone, I guess, between giving an incentive to plant corn versus soybeans. Interesting, we look around the state of Kansas, you look at the Garden City area, we have a soybean, pardon me, when you look at the new crop bids, forward contract bids for fall, the ratio of new crop soybean bids to corn is about 2.0. Well, clearly favoring corn. They have feedlots out there and ethanol plants. They're trying to keep that demand going, and that's the strongest of the corn signals. But when you start looking at the other side of it, here in the Columbus area, you have a ratio of 2.34. That would be slightly favoring soybeans. Topeka 2.37, Salina 2.32. So there you've got neutral to slightly favoring beans. For corn, you're still looking at Colby and Hutchinson area slightly favoring soybeans, favoring corn. And the bigger picture of all this is that we're seeing a move towards the development. Some new announcements here of late in the region, talking about renewable biodiesel, renewable diesel coming into play, and plants being built to meet that, and it's a demand pull factor for acres. When ag producers see a new plant coming up there, they're planning to produce soybeans or corn to go in, not just to livestock feed, but also to ethanol plants or soybean plants. And undeniably, we're not building as many ethanol plants right now as we are the oilseed crush plants. So I guess these economic forces in the state swing back and forth. At this time, we're swinging a little bit towards the biodiesel side, and probably encouraging some soybean acres instead. Also, pardon me, renewed discussion of canola that can be coming into the state. Well, that we can produce in the state. There's some plants that are considering crushing that. Some plans in Northwest Kansas to do that. So our crop mix is being affected by some of the processors that are coming into play, and by some of the energy policies in the country that help to encourage those new fuels to come along.
Absolutely. Yeah, some interesting dynamics at play for sure. And, as always, we'll find out soon, I'm sure, what's actually planted, the realities of that, and how those will kind of play out. But hopefully we just get the rain to sustain whatever is planted here soon.
That is the big gorilla in the room. We can do a lot of things. We just have ag production in terms of bushels or hundredweights to actually feed these demands. And given I think in the long run, we generally do best financially when we have really good yields and moderately good prices. And a lot of times when we have just outstanding prices, well, we're really short on the bushels. So I think the balance over time is to have vibrant demand, have good quantities to feed that demand, and farmers still making money with both the quantity and the moderate price coming to bear and helping them out.
Absolutely. I think that's something we can all get behind here. But Dan, as always, thanks so much for joining us today and providing this great insight.
Thank you, Samantha. I appreciate it.
Absolutely. Once again, everyone, that was K-State grain economist Dan O'Brien joining us for our weekly grain market update. We'll be back with more ahead on Agriculture Today.